Good morning, I'm Tyne Morgan. Clinton Griffiths has the day off, and I'm coming to you from Ankeny, Iowa. This is the site of this year's Iowa Farm Bureau Economic Summit. Farmers and financial experts getting together here to talk about the pressures and opportunities right now in farming. Well, I was happy to host part of the summit and talk with several people, including the president and CEO of the Federal Reserve Bank of Chicago. The Federal Reserve making headlines last week, saying that while inflation has fallen further toward their target level in recent months, leaders signaling they expect to cut their benchmark interest rate just once this year. The policymakers keeping the key rate unchanged at roughly 5.3%, where it has remained since July of last year, and is now at a 23-year high. Well, I did get the chance to ask the president and CEO of the Federal Reserve Bank of Chicago a couple questions about interest rates and the impact it's having on farmers and ranchers. Goolsbee telling me the Fed is focused on what it can control. The goal is to get inflation back to 2%, and until it reaches that level, the Fed won't veer off course. During the Fed meeting last week, Goolsbee says inflation data actually came out, and it was promising for the month, showing inflation is closer to the Fed's target at least for 1 month, and that happened without a recession.
There were a lot of smart people who said it's impossible. You could never get inflation down as much as we need to get it down without having a recession. Look, knock on wood, we've at least went through 2023 and got inflation down a lot without a recession. So far in 24, there was a blip back up in inflation at the beginning of the year, and now we've got some better news. So I think we're just going to have to keep monitoring. But for sure, that should be our North Star goal is let's get back to normal without people having to suffer any more than what they have already.
Goolsbee says until 2023, inflation has never fallen as much as it did without a recession. And he says while it's not paradise in the economy, that is a success. Now, he did note that ag and manufacturing are two sectors in the U.S. economy that are more sensitive to interest rates compared to other industries. Now, Goolsbee couldn't comment on exactly how many rate cuts are likely the rest of this year, but one ag economist agrees with the signals so far that the U.S. will only see one rate cut this year. Leading into 2024, many analysts thought the U.S. would see 2 to 3 rate cuts this year, but Dan Bossy of Ag Resource Company says there will only be one rate cut, and he does not think it will happen until the end of the year.
We think there'll be a rate cut maybe in the fourth quarter. We think inflation stays stickier, and at some point, I'm not sure, don't doubt it's this year, but the Fed may have to raise its target from 2%. I think getting to 2%, that last mile, is going to be really difficult. And with that, that's the only thing propping up the U.S. dollar right now.
Bossy says Ag Resource Company is also forecasting a break in the U.S. dollar index toward the end of the year, which could mean additional rate cuts in 2025.